yeah, after Singapore and Indonesia, it would always rank as the third market, no matter what the product was. It's a bit maybe unique that our product is fit for Sharia. India has now gone through almost like a credit renaissance. It's like all kinds of business models that can happen around credit is happening, has happened.
Because I hear from a lot of founders that money is pretty dry in Southeast Asia, the rest of the world as well, but like VC money is particularly dry right now. Have you noticed anything of that nature? Hey, it's Tim, and on this episode of Next Big Wave, I'm with Ritwik Ghosh, the founder or co-founder and CEO of Seedflex. Seedflex is a fintech out of Singapore providing SME lending. Is that correct, Ritwik?
Yeah, that's correct, Tim, and
Nice to
glad
meet
to
you.
be
I'm super
here.
happy to have you on the podcast. It's exciting. I have a lot to talk to you about. Being myself in the fintech space for quite a while in Southeast Asia, I'm going to have a lot that we can expand on. I gave you a quick introduction about yourself, but would you like to expand on that? Give us a bit more insight on who you are?
Yeah, happy to start with that. So I started Seedflex with my co-founder Savik about 6 months back, but my background in finance goes back about 20 years. So I started my career with Capital One Bank in US, then moved on to work with Oliver Wyman, which is a management consulting company. With Oliver Wyman, I moved back to India, where I helped start their business many years back now, and then to Singapore about 12 years back. And my clients were generally banks who were trying to venture into some sort of lending, consumer lending, SME lending, and increasingly they were looking at digital. And I chanced up on Grab as one of my last clients. And as I positioned it, so Grab happened because it was never really planned that I would join Grab. But yes, I ended up joining Grab in 2018. I was with Grab for 5 years, heading their fintech lending business, building it, running it, scaling it, and then I started Sitflix.
Cool. And it seems like you had a pretty, successful corporate career until recently. What made you want to go into entrepreneurship? It's like a 180, right?
Yeah, from where I started to where I am, it's 180. That's right. I would like to sort of think about it as one step at a time. Capital One, when I joined, was a relatively speaking new bank. They were always like a monoline lending company, very big into credit cards. By the time I joined, they were beginning to become a bank, but the culture was very data driven, entrepreneurial. This is 2006, right? So it felt like a new company. And then when consulting, it was a dual role because Oliver Wyman always worked like a startup, but all my clients were banks. And I increasingly figured that I really don't necessarily see myself as being in a 100,000 people, 10,000 people corporation just trying to
Mm.
do, incremental changes. Then the Grab was in some way a venture because in 2018 there was no fintech lending in Grabs. That's what we did set
Mm.
up. But there were risk covers, right? It was under the umbrella of Grab, Capital, etc., were way more available. So it's sort of stepwise fashion, right? And after Grab, we are at a position where we're like, we can take this chance, and the opportunity is large enough, big enough, and if not us, then who will attempt it? Is kind of where we are. So this seems to be the right frame to attempt to make the right impact for in the space.
Okay. And just so we have a better understanding of Seedflex, so you're currently operating in Singapore or all over Southeast Asia? Are you self-funded or you have raised capital? Just to get to know the product a little better as well.
Yeah, so we started late last year. We are based out of Singapore, but our markets are at least initially Southeast Asia. So just maybe just on unpeeling the onion a little bit in terms of what the product is. So we are providing what is our proprietary product, Pay as you sell advance. It's an advance to B2C merchants who are into cashless commerce based on their historical volume of cashless commerce. and some projection of it. So up to 12 weeks of their historical sales. And that advance is like a limit that exists as their commerce goes up, it goes up, and they can draw down at any point in time. And whenever they draw down on that limit, as in whenever they take the advance actually in cash, they pay back from a share of their future sales. So it's
Mm.
a, you can say it's revenue-based financing broadly. You can say it's embedded financing. I mean, these are all kind of terms which have now been used in many different ways, but it's in some sense a merchant cash advance done in a more granular, fractional way. So we are live in Malaysia in a beta testing mode, and then we're planning to launch the same product across other markets in Southeast Asia.
Okay, awesome. And I mean, you touched base on like your background, so I kind of understand where the product idea might have come from. But because this podcast is about inspiring existing and potential entrepreneurs into building something, just love to think about your thought process on how you really came up with the product, the discussions maybe with your co-founder, all the way to launching essentially.
Yeah, so the journey is quite organic in some sense, or natural. So maybe I'll roll it back a little bit. When I joined Grab, prior to Grab, most of my experience was, as I was saying, with banks, right? They're the ones who traditionally used to afford consulting fees. So they will
Right.
hire us to do, oh, we want to get into digital lending. We'll give them a big sort of presentation and this and that. I'll come back after 6 months or 9 months. Not much has happened. They would do some small experiment here and there, and oh, the risk is very high. Oh, it's very hard to, CAC is very high, or ops is very
Mm.
high. And I was getting to a point by the time it was 2017, 2018, which is like they have been at it for years. It's not like a bank can't crack something that they want to crack, right? If a large institution really wants to do something, they can do it. So I started looking at it as maybe there is a gap in the market where you're a micro small business or a small consumer bank, a large bank maybe really doesn't want to reach out to you and try to understand your micro needs and try to create a product for you. You're just too small in terms of
Hmm.
the economic pie, right? And the mission of those institutions maybe is more whole scale, like serve large businesses, serve large, high net worth individuals or whatever. And that's when I came across Grab back in 2017. Of course, Grab wasn't into financial services, but the mission was very clear. The mission was about making a difference to small businesses, micro entrepreneurs, drivers, and merchants. And that was refreshing. The fact that it was a mass business which was trying to make a positive impact for the millions of people was very refreshing. The challenge to us was, can it be done in financial services? I mean, fair enough that ride hailing has created this new segment or delivery, but can the same thing be done in credit? Which is what we essentially address, that we could give credit to millions of gig economy workers, which basically drivers for these platforms, based on their historical income pattern, and then take money out of their future income fractionally, and that manages risk well enough that it competes with what traditionally is a prime, super prime bank customer. So adds good on risk, but obviously higher returns because these folks are absolutely underserved. So that ride was the first 3 years of our journey with Grab, both mine and Sovix. So the team that we built and how it scaled. And then, as it happens, our ambition was never limited to Grab. It was to build a digital lending business. And we figured that why should it be that only a particular ecosystem's merchants and drivers benefit from such a solution? Why can it
Mm.
not be broadened, right? Obviously, an ecosystem has advantages in terms of data, access, and capital, but why is there a world garden of only few benefit from such a solution? So we started thinking of creating a more horizontal product. So do the same kind of product, which is very seamless, deeply embedded based on historical sales patterns, but do it more from a platform agnostic way where we can aggregate the information say about a small F&B or an online merchant selling on multiple platforms, and then give them a single credit solution that takes care of most of their needs, right? So that's the whole
Hmm.
idea of Seedflex, is to democratize the solution that we build and some other platforms have built, not just us, but make it more accessible, make it more horizontal, and then just work with many different platforms to bring it to market.
Makes sense, yeah. When I was building Tendopay in the Philippines, I remember there were quite a few people tackling the SME lending space. There was like the invoice financing companies and whatnot. If I recall, like they weren't doing like fantastic. I think a lot of issues with data aggregation for underwriting, collections, things like that. And it doesn't help that COVID happened at the same time, so there was an issue there, right? I'm curious, why did you choose Malaysia as one of your first markets? And I'm double curious because I don't have many founders who are operating in Malaysia right now. So I really want to learn more about that country specifically. Everyone's talking about Indonesia, at least in the past 6 years, as a founder in Southeast Asia. That's been the hot topic. So this is really exciting for me. I want to learn more about Malaysia and why you decided to go there.
Yeah. So the space that we are tackling is really merchants who are into cashless commerce, right? Where they're selling online, or they're using solutions or platforms who we can partner with, which means payment service providers, online, offline, retail POS solutions, marketplaces, on demand. So these are all channels or partners through which we will serve the merchants. We don't directly go and say, hey, here is this advanced product for you or whatever,
Hmm.
right? Because we don't have historical data if we just go directly. At the same time, we can't take money out of future sales. So it's really important that we work with partners, and it's really important that there is a large number of cashless B2C merchants. Now, when you
Right.
apply those filters, I think at a macro level, Indonesia always comes up at 50 million micro merchants, and of course, when you say a 1 million in Malaysia, what is 1 million against 50 million, right? But the real point is what percentage of them are cashless, and how do you enter that cashless equation for the merchant? So if you apply those filters, Malaysia comes out to be about 500,000 merchants are cashless. The share of cashless is quite strong. It has a
Hmm.
very evolved direct debit, bank transfer, wallet payment. So the payment landscape is quite evolved, which basically means there are
Hmm.
many ways for us to fractionalize the repayment. I mean, what's core to us is it kind of goes back to your original question on why SME also, right? Our core thesis is a lot of people continue to treat credit as a front end problem. That, oh, I need to know you very well to give you money, otherwise you will not pay me back, right?
Right.
Our thesis is, while that is true, if I can get paid when you get paid, I don't need to know you as much. Just because I will get paid when you get paid, and in fact I will get paid before you get paid, I can give you money and see how it goes to an extent, right? So that the prior threshold of knowing you through data goes down. The same applies for micro small businesses. So we wouldn't give money if we don't know how we're going to get it back, not end of the month, because these merchants sell every day. No point waiting for end
Right.
of the month. Every day. So when we look
Okay.
at that, it figures like Malaysia is relatively attractive, an easier place to start. We also got the Sharia financing license there over a few months. So we can do all of this end to end in our own control. However, that's the start, right? It's not meant to be a market where we scale and reach a certain height. It is a market where we
Right.
pilot, test, and then we take those learnings and go into larger markets like Indonesia, Philippines, maybe Thailand,
Okay.
and such.
So, a couple things that I thought of. First of all, like it seems like we had a very similar idea because our last pivot, which basically helped us scale massively with Tendopay and then exit, was instead of underwriting and struggling with collections, we did exactly what you did, but more on the consumer side. So we partnered with large companies and issued our loans through their payroll so that we would collect repayments as a form of salary deduction, minimizing the risk. So exactly the same model, but for SMEs. Second thing, I don't know much about Sharia laws for lending, and I think it's a really interesting topic, and probably a lot of people might be interested in learning more about that. Can you elaborate, like what are the limitations within that Sharia law?
Yeah, so maybe first the technical structure. The technical structure of Sharia financing is it's not a direct lending product because there can't be a direct lending interest bearing product under
Right.
Sharia. So it is essentially structured as a Sharia trading product. Trade with payment terms. So in a way, you are providing or selling certain goods, and against those goods there is a payment term. The payment term basically means that you buy and sell with a margin, and that's the margin of the product, right? So
Mm-hmm.
what that means is, I mean, it works for us because we only have a single fee product. So the product I was explaining, cash advance, there's a limit. And when the limit is free, the merchant doesn't pay for the limit to be in place. The account is free, the limit is free. When the merchant draws down that limit is where a fee gets added. So
Mm-hmm.
take an example, say the limit is $10,000 based on historical sales. The merchant one day goes and says, okay, I want to draw down $5,000. It's only when the merchant draws down $5,000, a fee gets added, and say the fee is what 6%. So the merchant will pay back 5,300. That's it. There is no late fee. There's no repayment fee. So there's no interest. So it's a bit maybe unique that our product is fit for Sharia because we don't have three other fees, four other fees. It is one single fee,
Mm-hmm.
and Sharia has a very high receptivity for an audience which understands that as a ethical, customer friendly financing, right? By the
Mm-hmm.
time your Sharia, because of which we have to go through a Sharia certification process, it's a very rigid structure in some sense. It doesn't allow any lender to now suddenly go back and add another fee and this and that. No, you can't do that. It is exactly the contract that we were approved for. But within that contract, there is an assurance that it is friendly for the borrower and it can't be predatory in any sense.
Right. Yeah, I mean, it makes sense. I'm curious now. You talked about Malaysia as a good place for you to start with this specific business. In a few words, I don't know if you know enough about it, but is it a good space for people to start companies in general? Like, is there a lot of opportunity in Malaysia that's quite untapped, or is this more specific to your business that you notice this opportunity?
No, I mean, we ran the business in Malaysia. I mean, I could speak from my prior experience. It's one of those markets where you always look at opportunity versus competition, right? Competition from talent, competition from capital. So
Mm-hmm.
think of it as at least two axes, if not three axes: competition versus opportunity. Now, if you look at that trade off, Malaysia comes across as a pretty nice opportunity relative to the capital that's invested and the competition that is invested, right?
Mm-hmm.
So when we ran our BNPL business as part of Grab or our driver lending business, it was always one of the top three markets. In fact, yeah, after Singapore and Indonesia, it would always rank as the third market, no matter what the product was, because the currency is, well, it's become weaker now, but at least the purchasing power is higher than Indonesia.
Mm-hmm.
So it doesn't need the volume of Indonesia. Competition is tends to be way lower, and the services are not available at the same level as it is available in Indonesia. It's like anything that you do, there are 10 players in Indonesia who have tried and 10 more who are trying. Whereas if you
Mm-hmm.
take the same business model and go to Malaysia, one have tried, two may be trying. I mean, it's just different
Okay.
environment, right?
So that's actually really interesting because people who might be thinking, oh, I want to build something in Southeast Asia, it's hard to know where to start, right? You're looking at Indonesia, all the funding, all the startups, so it's exciting. Of course, Singapore, but then it's almost not like building in Southeast Asia. It's just a developed
Yeah.
nation in Southeast Asia. Philippines is easy because of the language. There's all these different things that people might think about. So it's very good to hear about Malaysia. And obviously, you mentioned earlier with Seedflex that you guys are planning to expand to the rest of Southeast Asia before going even further. And that's a topic that I discuss quite a lot because VCs in the region always want to invest in view of a Southeast Asia expansion. And for many businesses, it's not straightforward given their restrictions, the cultural elements, and many factors. In your case, you mentioned integrations with, I assume, things like Zenday, 2C2P, and other payment gateways. Is that correct? Am I understanding correctly the type of integration you're building? And the assumption there is that when you expand to Southeast Asia, those partners remain the same. So the structure of your business is not completely different from one country to that. Is that a good recap, or am I missing something?
No, I think you're hitting on one of the important points, which is partners and regional presence of partners and scalability through partners. But I would maybe just kind of take a slightly different lens into credit itself, or lending, right? Um, which is, if you look at it traditionally, or historically, there have been very few lending businesses which have scaled very well across markets. Not
Mm-hmm.
just in Southeast Asia, I think globally, you would struggle to find a fintech lender that's really truly global in any sense. But if you look at payments, there is Stripe, there is Adyen, there are quite a few many payment companies, and we have looked at that when we built this business with Grab, which was as part of the rest of Grab, was from a tech product perspective always built out of single location, and then we had to go through an amount of localization, customization, featureization, and cultural adoption to roll it out in 6 different markets, right? And we came to the conclusion that if you start with the thesis that, hey, this is a segment which has a need of a certain nature. For example, in our case, there are millions of merchants who have now gone online or cashless from pre to post COVID, right?
Mm-hmm.
That number is now 7 plus million in Southeast Asia. And this has happened in a very rapid fashion. Maybe before COVID, there were four or five. After COVID, it became seven, and is still now growing at sort of 20% year on year. When that happens, and you think of how they have gone online, they've gone online with Shopify, they've gone online with marketplaces like Toko or Grab and such. And that's super easy now, right? I mean, if I want to set up a store, I can set it up tomorrow. It's not a big deal. I can accept payments. But when that has happened, credit, or we can call it credit based on that cashless commerce, that hasn't kept pace, right? That still is, it's still catching up. It's actually still quite traditional in some sense. You do some
Mm-hmm.
bank statement submission, this stuff, that stuff. So that's the gap that we're trying to address. We're trying to address a gap that has happened because of COVID, where there are millions of merchants that have gone online and cashless, but credit hasn't caught up. So at that level of abstraction, it's a problem that exists in maybe 50 markets, at least 5 markets in Southeast Asia. So we're building a
Mm-hmm.
risk model, building a product, building everything from a concept of, hey, that's the opportunity. Then it's just a question of, where do you get stuck in the local aspects of it? Is regulation, is capital, is KYB, and those models which are always local. So our business, in some sense, we have separated the tech part of the business, or the software part of the business, as a super scalable, location agnostic business, and then the capital part of the business, which by nature is going to be a local business, right? So in Malaysia and in every market, we'll always have a discussion between, do we bring both sides of the business into the market? Or maybe in certain markets where the capital is present, let's say just hypothetically, say India, right? India has so many different providers of capital, of so many different kinds of capital. We don't really
Mm-hmm.
foresee entering India as a direct lender, because there are 500 direct lenders who have been in that market. Maybe Indonesia is not that different, and there's so many direct lenders.
Mm-hmm.
But as long as the need exists, we will still go in with the solution layer, and then orchestrate between the partner. Say you give examples of payment gateways, could be online marketplaces and such,
Mm-hmm.
and the ultimate lender or the balance sheet provider. We will still be the solution layer, the merchant layer, and such. So
Okay.
that's how we think about it.
Yeah, no, that makes sense. Becoming an enabler or like a tech partner basically makes it just allows you to expand and leverage what you've built without having to take on that risk, right? So it's quite smart. You touched based on a few things that are a struggle in most financing companies, legal frameworks, it's compliance, all of that stuff. Just curious, up to today, I love asking this question to founders because everyone has their story. If you had any horror stories in your business or maybe at grad that you want to talk about, that's always something that people can relate to.
Well, I wouldn't say it's horror or not, right? Because some of these stories end well, but one of the things that we realized is, see, if you come from an industry that doesn't have a regulator, right? So, for example, say mobility or delivery of such industries, when Grab started, there wasn't a regulator who knew how to regulate a business model like Grab or Uber, whoever. When there is no regulator, you are the one who is doing it for the very first time. There are ways you can do things which just continues. You can scale, and then you can say sorry if need be, right? Or sometimes you don't have to say sorry. You shape the regulation, right? The thing with financial services is, as that's never true. When you try to do something creative, innovative in financial services, there is always a regulator who is looking at you. um,
Mm,
so you have to take a fundamentally different approach, I think, which is you have to understand what the regulator cares about, what's the red line, and then build your business model within the red line. For example, if you're going into consumer credit that creates these kind of unsustainable consumer bubble, right? This
hmm.
online apps, you download the app and click, you get money. Yeah, I mean, those things can sustain for a little bit, but if they're big, the regulator is never going to like this. It's just not good in some sense. So
Right.
with credit, we, always believed that you pick a business model where the purpose is clear, it is serves some greater good, and then you can engage with the regulator if need be today or tomorrow and explain your situation. That hey,
Hmm.
instead of drawing credit bureau data and going through traditional means, I am just doing it alternately with
Right.
different information but equally predictive. Yes, give me time, I will prove it to you. I had done it before. Give us those are okay, but if you're going into a business where you can't defend why you're giving money to somebody who can never pay you back, and you kind of already know that he or
Hmm.
she can't pay you back, then I don't think the regulator will let you run for too long, right? And that will end in our story, just timeline.
Yeah. Fair enough. I think most countries in Southeast Asia have implemented sandboxes for this type of stuff. Right? I don't know if Malaysia has done it as well, but I know that in the Philippines we were operating out of a sandbox with the SEC. So I know that they're trying at least to be open to these new business models as of late. It's fairly new for you to be a founder. On your LinkedIn, it says 7 months. Let's say plus or minus a little bit. What do you love about being a founder?
I think the thing so far is, uh, all of my energy is spent, basically thinking about what we are building, who it is for, and just pure alignment and clarity on that at this time, right? The difference being, in any organization, I think this is, and the more senior you become and the larger the organization becomes, the increasing amount is spent in managing the organization, managing upwards, downwards, sidewards, whatever it is, right?
Hmm.
And at least 50 to 60% of my time on a day would be just meetings, and very large meetings where sometimes the purpose wasn't clear for anybody,
Mm.
but we just had to be there. Now I feel no no compulsion to have a meeting. Only reason to have, actually, very few people want to have a meeting just with a startup founder for no reason, right? There's no point.
Hmm.
So all of that distraction is out for the
Hmm.
moment. At least it's really focused on what are we building, who are our partners, and who are our merchants, and how is it going to work, right? So I just like that degree of focus and energy within the a small team. So our team right now is six of us based out of Singapore, four in Malaysia because that's the market we've gone live, and our engineers are based out of India. There are about 10 of them.
Hmm.
So yeah, it's a small team. We get into huddle every other day, and just work through everything that is going on. It's that's the refreshing part of it. It's kind of going back to where things started 5 6 years back when I joined Grab, and when I
Yeah.
was with Oliver Wyman.
For you, I think it's a bit different because your Grab unit you built from scratch, so you kind of already had that founder mentality. Because I was going to ask you like how you felt about the transition from corporate life to being a founder. Obviously, as a founder, you have to be self-driven. You're the one setting the direction, so it's a learning curve, right? Not everyone knows how to do it off the bat. Is there something there that you learned about yourself, or things that you didn't expect as a founder that kind of shocked you about the day to day?
I mean, not so far. I mean, I guess I wouldn't have done this if I wasn't with Grab and I didn't get to build what I built, right?
Hmm.
Because so there are, first of all, I think from consulting to go into an advice giving business to a building business is already 180 degrees. That
Right.
was my biggest learning is how to become a consultant. I had become a very good consultant. People were
Hmm.
paying me for my whatever minutes and hours. That was good enough. But I wasn't building anything. And
Hmm.
when I started with Crab, and suddenly this vast white space of hey, go build a lending business. How do you go and build a lending business when you have nothing, right? I mean, of course you have the ecosystem, but there's no
Hmm.
tech, there's no product, there's nothing. So I think that really prepared both me and my co-founder. I mean, he has got a bit more startup experience than I do, but it definitely prepared me for all the like all the 20 things that
Hmm.
you actually want to do, and then the 21st or the 22nd thing that comes up and just surprises you. So those some of those things have happened in my Grab career, and they're happening every day now. But at least they're not so surprising to me. I mean, for example, one of the things that we talk about is when we planned our launch. I mean, there were many things which were like, oh, it's going to be, we need to get a partner. We need to obviously get merchants, get do this, get that. We somehow never thought that opening a bank account will be the single largest bottleneck for a company to be in business, given we have bankers and we know bankers, and bankers are our, you know, part of our advisors and whatnot. But it doesn't matter. We had to go through, 5 different bank account opening processes for one bank account to be opened. Not
Hmm.
because they didn't want it. It's just that the regulation and the paperwork and the timelines were just weeks to days to months, like uncertain. So those surprises happen, um, but at least at this point, we kind of know it's going to happen. And I guess where it will change is accountability for well-being of other people, as in staff. I,
Hmm.
in my past life, I've never been individually accountable for folks who we have employed. Now I am, and as the company goes through its ups and downs, I'm sure there will be areas and times where that
Hmm.
will create some sort of some sort of ask on my decisions, which I don't know
Right.
yet, so it's a bit theoretical. But I could foresee that's a new thing because I haven't had to deal with that before.
Yeah, yeah, that's a big one for sure. And as you scale, it compounds as well. And a lot of founders, and you just mentioned things that can start building up in your head, like responsibility for all these employees and payroll and things like that. So a lot of the founders I speak to, they have kind of built something like a support system almost. And I'm curious if you have that yourself, whether it's a mentor or if you're part of a mastermind or some sort. How do you either keep learning and also build a support system for yourself as a business person?
So, a couple of things. One is definitely having a co-founder. So between me and my co-founder, we have been through this um, building phase for the last 5 years, and there is a certain strength that I bring to building it functionally as well as, I guess, personality wise, which complements
Hmm.
his. And that way, things that create stress for me are not generally the things that create stress for him. So when I'm stressed, I can talk to Sofik and vice versa, right? So a little bit of like what do you call a release valve for each other. Say, okay, fine.
Yep.
Then I think the second one is we we brought in. I think you asked about funding or fundraising, right? What
Right.
we have done is our first raise very directly have been only with our friends, other entrepreneurs who happen to be our
Hmm.
friends, whether they have built multiple businesses or still running businesses. So it's this sort of network of founders, colleagues, and fairly senior executives. We use them as our kind of pool of advisors,
Okay.
formally, informally. So things don't plan out the way we wanted to. At least we know who to call and say, "Hey, what did you do when this happened?" Right? Um,
Mm-hmm.
like say what we one of our partners sent out an email campaign and no one responded. I'm like, what the heck, right? What wait, is this the product bad? We are bad, something's bad. But this has
Mm-hmm.
happened before. It might happen with us first time, but this has happened 5 times in other people's life where they have done B2B
Yep.
sales. So it's not such a unique thing. So that happens. And yeah, so I think and then one VC that we have raised from is 500, and the reason
Okay.
we raised from 500 is because of their network, um, and very deep network in Malaysia in particular. So they also have been really helpful in the last few months to just make connections, give counsel where it has been necessary, and and that's the plan going forward, that we have this group that we can draw on.
That's really cool. So you closed your round not too long ago. Are you already starting to think about the next fundraise? Because I hear from a lot of founders that money is pretty dry in Southeast Asia, the rest of the world as well. But like VC money is particularly dry right now. Have you noticed anything of that nature?
Not yet. Maybe it's too early for us to kind of experience that. But the way we kind of planned for it is, so we raised our seed round late last year, um, Q4. That
Okay.
gives us enough runway to continue to build out this business for about another year and a half. Um,
Okay.
and because it's credit business, it the burn aspect of it or the opex shouldn't be too much, as long as we can provide the loan book capital structure efficiently. So a lot of our focus at the moment is more on creating the right structure to fund the loan book
Hmm.
in Malaysia and in, say, Indonesia, where we might not be the direct lender, but there is an off balance sheet structure. So, how do we fund the off balance sheet structure or the risk capital part of that balance sheet? So,
Right.
that's where we're investing most of our energy at the moment, which is slightly different pool of capital than the traditional VC equity type capital. And that's a more, I guess, conversation about risk return profile of the loan book, the risk underwriting principles, just a different set of conversations that we are having than typical tech VC conversations.
Yeah. So you guys are not lending from your balance sheet whatsoever at this moment. You already found off balance sheet partners. Is that what you were saying, or you did some of your testing on balance sheet just to prove the model?
Yeah, so Malaysia is on balance sheet for us, but there is still a debt component to that structure. It's not entirely equity
Right.
funded.
Yeah. 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 For
And
sure.
Indonesia, where we haven't gone live, Indonesia would be entirely off balance sheet. But within that off balance sheet, we will have obviously risk guarantees, and so will take the risk. It's just a question of who provides the funding liquidity. That wouldn't be
Yeah.
directly us, but we'll still take the risk. So there is going to be capital in Indonesia as well.
Okay. Very cool. A question I like to ask again. You're so early on the journey that I feel bad asking you, but if you weren't working on what you're doing now, is there a project that you have a passion for that you would be working on? And again, this is literally your passion project, probably, but I'm asking anyways in case you have a different answer.
No, I don't. This is the passion project, as you rightly said.
Yeah,
That's why I'm doing this, right?
fair,
If
fair
not this, it
enough.
would have been. I mean, we had a list of ideas on credit that we wanted to pursue. I personally want to pursue, and it would be one of those.
So, what, like, can you share some of them, or are you keeping them secret in case this doesn't go well? You'll pursue the next one.
No, it's not like that. Actually, no. You see, my background's a bit different, right? I grew up in India, where credit was very difficult.
Mm,
Just availability of credit was very difficult. But this is like whatever 20 plus years back. Um, and I always share this story, which is when I got the student loan to complete my MBA in India. That just felt like a massive privilege. And probably I
mm-hmm,
only got it because my father works for a bank or worked for a bank.
mm,
A lot of my peers didn't get it. Sometimes they couldn't pursue what they wanted to pursue because they didn't get that kind of loan, right?
right.
When I moved to US and happened to work for Capital One, which it was just a completely different world. Capital One back then was still providing credit primarily to subprime and to an
Yep.
extent prime. And I look at their demographic profile and the demographic profile that most of my friends and I come from, they're very, very different. And even with our demographic profile, which is considered middle class, upper middle class in India, there was no
Mm-hmm,
credit. And whatever was considered subprime in US, there was a massive amount of credit. And a lot of that credit, until it turned out to be overly leveraged, it was doing good. It was fine.
mm-hmm,
We looked at the structure, we looked at what it was producing for individual and the lender, it was fine. So that gap has always remained with me, that if credit is done right, it can do a lot of good. Um, and but the responsibility of doing it right lies primarily with the lender. I think it just falls to go back to the borrower and say, why did you take the money? Now that's the
mm-hmm.
point. Why did you give the money is the first
Right.
point, while not being sure whether the person is able to service this or not. So the responsibility is always with the lender. But if it is done well, it can create tremendous amount of value. So I take that and then I move back to India and Southeast Asia, and I constantly compare how India has evolved. Obviously, US has evolved in its own way. How India has evolved and how Southeast Asia is evolving. India has now gone through almost like a credit renaissance. It's like all kinds of business models that can happen around credit is happening, has happened, scaling has scaled. It's just brilliant. Like you want a loan against shares, you can get it. Loan against property, you get it. You can loan against fractional property, you can get it. You can get a loan for a day, loan for a month, whatever you want. There is a market there, there is a lender there, there is some price discovery that's happening, all kinds of
Mm-hmm,
data getting pulled. And I look at Southeast Asia. I think Southeast Asia is still catching up. It's 5 8 years before all these business models that have worked are working to an extent from other markets are coming into Southeast Asia, right? And and the gap is both on the supply side as well as supply side as in capital. I think it's
mm-hmm,
quite difficult in Southeast Asia to get scalable, affordable capital for a lender to lend forward, right?
mm-hmm.
Like for example, the private credit funds are just about coming up. They're still
Right.
small. Whereas you look at a market like India, market like US or in the Europe, I mean, it's been around for ages. And then on the origination side also, there are not as many varieties of scale originators that private credit fund can fund, right? So if you're looking at
Mm-hmm,
how to deploy $100 million of balance sheet into Southeast Asia, you'll probably find, I don't know, maybe 10 lending companies, maybe less than 10 lending companies. You will already find like 25, 30 in India. So, so long story short, my point is the gap here is way bigger than what Seedflex can solve or any one party can solve. Is really the point of, can we create an ecosystem of funders, lenders, companies which are solving one part of the gap or the other. And that's my broader aspiration, is to just be part of that solution.
So, first of all, I have to say, I really appreciate your thought process and your storytelling because I ask you a question and you go backtrack your thought process. And I don't know if that's the consultant in you or just your personality, but I really admire that in someone that they're able to find an idea in their brain and go backtrack all the way to the origin of this idea. So props to you. I really appreciate that. And I think that's a really cool skill to have. It shows that you don't just say things without thinking. Love it. Cool. So, I don't want to hold you too long, and I know you're a busy guy, but a couple things I want to do before we finish here. What happens in every episode, I ask my guests to ask a question to the next guest without knowing who they are. And similarly, I'll also be asking you last guest questions. So if you want to take a couple seconds and think of a question, general question you'd like to ask the next guest, that would be awesome.
Yeah, I would just love to know why you are doing whatever it is that you are doing.
All right, fair enough. And the last guest asked, are you optimistic about the next 10 years or pessimistic?
That's a hard one, but I'm optimistic. Absolutely. In general or sense or specific sense, I just my optimism goes back to basic principle, which is we are a force for good on average. We humans are a force for a good. If as a majority we want good, good will happen, and I think as a majority we want good, so good will happen.
I
That's it.
like it. I can only wish that happens as well. Even though we have all these events that are amplified by the media, obviously, it's like nice to stay positive overall. And then last thing, do you want to shout out to anything as a closing statement to this podcast?
Yeah, seed to grow, flex to repay, seed flex. That's our mission. We just want to make a positive difference to micro small merchants. And thank you, Tim, for reaching out and just giving
Of
us the
course.
opportunity, giving me the opportunity to share. Really privileged.
Well, thank you for being here. And that's the pod, guys. Thanks for listening in.
Thank you all.